The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Friday morning. We got about 24 minutes to go until the start of trading, and we got markets yet again in higher territory. We get the S&Ps up 12 points this morning, trading at 43.64. We got some retail sales numbers, strong numbers coming out this morning on the economic front. We'll jump over to those in a moment, but putting a further lift in the markets that already were slightly in the green coming into that number. You jump over to the tech stocks. It's been an upward territory slide for most of the overnight session, but quite a pullback we had from early yesterday. You look where we were. Wednesday, you're approaching 15,000. You come into Thursday's action yesterday, just right near that number. You're talking about 14,959. We trade down about 250 points. We make a low at about 2 p.m. Eastern time. Since then, we're up about 100 plus points in the NASDAQ 100 at 14,839. The Dow. Check out the Dow catching a bid. Now, we are right up near all-time highs on the futures. Look at the Dow compared to some of the other indices. Quite a melt upwards. We're trading this morning up 67 points, 34,931. Now, quite a difference on this chart when you look at the Dow compared to the NASDAQ 100, right? You've gotten it all back. We got highs right now in terms of the 5 last days that we're trading in compared to the NASDAQ 100, where you're still about 170 points, more than a full percent from where we were on Wednesday. The Dow actually above that level. The S&Ps were about 20 points off the highs we had Wednesday morning. The Russell, quite a different story as well. You were up at 2280 a week ago to end the Friday trading. Excuse me, that's Sunday night, but pretty much right where you ended last week's trading. 2280 down to 2159. We're trading at 2207. You're positive by almost a full percent in the Russell right now. Crude catching a little bit of a bid. We make it to $70.87 last night. We're trading at 71.65. You get the gold contract backing off a bit, but catching a little bit of a bid since 7 a.m. this morning. Gold's off $5 on the session, but we're up about $7 from where we were at 7 a.m. this morning at 18.23, and we jumped to notes and bonds right now. We got a little bit of a lower price and higher yield. Interesting that you pull back right to the lows that we had intraday yesterday. You're looking at a yield in the 10-year of about 1.33% right now. We jump over to the volatility index, the VIX, 1625 on its way to a 15 handle. If we continue an upward trajectory of this market, S&P's up about 12 as we come into the opening bell. All right, what we have happening in the market, we'll start it off with retail sales. Strong number. As Bloomberg puts it, gain in U.S. retail sales underscores solid, steady consumer. 9 of 13 retail categories showed increased sales in June. 0.6% advance in overall sales topped the forecast. You get into the numbers. The value of overall retail purchases advanced 0.6% last month, following a downwardly revised 1.7% drop in May. The Commerce Department figures showed this morning. Excluding autos, sales jumped 1.3% in June. So interesting there, right? We know that autos are accelerating on a CPI basis, but if you exclude autos, the sales jumping dramatically in June to 1.3%. The June increase in overall sales topped all estimates. Median projection was looking for a 0.3% decrease in June, and a 0.4% gain excluding autos. Quite a beat, right? When you look at the projections in terms of a 0.3% decrease was what they were looking for, and the number comes in at an advance of 0.6%. Excluding autos, they were looking for, what was it, 0.4, and it comes in at 1.3. Quite a beat in a big way. As Bloomberg puts it, 9 of the 13 categories posted increased sales, including solid gains at electronics and appliance outlets, clothing stores and restaurants. Motor vehicle and part dealers fell 2% in June, likely in response to limited inventory as automakers face a supply chain crunch. So you get the CPI data showing increasing prices in the auto sector. At the same time, you actually see those numbers decreasing, having to do with a limited supply, as we're all somewhat aware of in that car market. Digging a little bit deeper, some of the numbers that stick out in the numbers of retail sales this morning. Clothing store sales rising 2.6% and 47.1. I mean, the year ago numbers are just staggering, really not even worth mentioning because they're so skewed. Electronic sales increased 3.3% last month. Receipts at restaurants and bars climbed 2.3. I mean, you want to see that number probably climbing a little bit higher than 2.3, right? Electronics coming back online quicker than restaurants and bars. Sales at non-store retailers, which include e-commerce, even advancing 1.2. And again, I mean, these are the service industry is supposed to be exploding, folks, but we're not quite there yet, as evidenced by these numbers. As you have, non-store retailers, including e-commerce, jumping 1.2. You only got restaurants and bars climbing 2.3. Gas station receipts beating restaurants and bars 2.5. We're out there. We're traveling. Maybe that's a little bit of part of that, of course, with the gas station. But the economy is rocking again in terms of the crude being used, of course. Retail figures aren't adjusted for price changes, so sales reflect both changes in cost and demand, as they put it. That number out at 8:30, and as I mentioned, though, putting a little bit of a further bid into the markets. There's your 8:30 volatility. We were already higher coming into that number, and the market just holding on to those gains with about 18 minutes to go until the opening bell. Okay, what else we have going on in this market? Let's jump around to some of the stocks. Moderna kicks things off, so they are going to be added to the S&P 500. They're going to be replacing Alexion Pharmaceuticals, which is being acquired by AstraZeneca, and Moderna hopping on that news, rightfully so, I would say. There's your acceleration from 260. We're up at about 277 this morning. They'll be added to the S&P 500. You put this thing on a daily, you put it on a 3-year weekly. Quite a run for Moderna. And the run ain't stopping, folks. We're going to open above this. We're going to open about 278, not quite registering on this chart yet, as the day has not started trading yet. Remarkable when you look at, we come into 2020 at about $18. You come into 2021 at even $120. Quite the volatility early on in the year when we got a pullback in Moderna from 189 all the way to a low of 117. But since then, we're up about 250%. We're going to open at $280, give or take, on Moderna. And their biotechnology, folks, very promising on a lot of fronts. A couple articles coming out this week, even talking about what could be used in terms of the technology they're using for the vaccines and how that could apply to other ailments hitting Americans and citizens of the world. All right, jumping around to what else we got going on in terms of equities. That was Moderna. Diddy. So I was talking about this yesterday. I didn't understand why people were paying a price so close to even where it was trading at when it went public. Let me back this up a little bit further. We'll put it on a 20-day hourly. There you go. That gets the entirety of a public company. And I was saying, I can't believe that this thing was trading yesterday morning at the time of my show up at about $13.50. When the first day it went public, it was as close as $14.14. Well, give it some time, folks. You go from $13.50. We're going to open under 12 this morning on Diddy. As again, some tough news with subject of an on-site cybersecurity review, 7 different government departments. Not what you want to hear as a shareholder. Excuse me. Got a little something caught in my throat this morning. Jumping back to the S&Ps, we'll take a look on a daily basis. I talked about this in my newsletter yesterday, Rocket Equities and Options. I mean, folks, even if you're looking for a pullback in this market, we are solidly within an uptrend channel in this market. Even looking for a 382 retracement of this run we had from June 21st, didn't quite get there in that pullback. That put us to about 42.86, talking about 80 points below it. Keeping in mind, though, 80 points. We're just touching the bottom boundary line of this upward channel. Stay tuned, folks. We'll come right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&P is up about 14 points right now, trading at 43.66. I got a chart of Square up here. Square up about $4 pre-market. You see the volatility last night after the close. And what that has to do with is I believe we had our man, not our man, but Jack Dorsey. His name escaped me for a moment. Square CEO, also, of course, the founder of Twitter, talking about decentralized financial services. Now, no matter what you think about Twitter, folks, quite an innovator coming up with Twitter and the payment company Square. I mean, if you remember, folks, I mean, how it really took fire. And it's amazing. There were so many technological opportunities out there in the market. And you think about the amount of technology companies that could have implemented the type of payments that Square facilitated. And the big thing they had early on, right, was that you just able to plug something into your phone, which then became a credit card slider. And you could take credit cards just through your phone. Amazing that a company like Visa, Microsoft, Amazon, Apple, you can name a million. Microsoft didn't facilitate that type of innovation nonetheless. And I would say that he is dead on in terms of you got somebody like this that is a visionary, and he is taking it to talking about using decentralized finance business using Bitcoin. Really interesting to see how that would apply to that company in terms of profits and revenue. But Square CEO and Bitcoin bull Jack Dorsey said late Thursday that the company's focused on building an open developer platform with the sole goal of making it easier to create non-custodial, permissionless, and decentralized financial services. So the unit's going to include the Seller, Cash App, and recently acquired Tidal businesses. And DeFi applications are those that don't rely on centralized authorities like banks. I'm sure the banks love this type of news, but instead use blockchain-based smart contracts to execute transactions. Most are built on the Ethereum blockchain. DeFi applications allow financial transactions that are more easily accessible, efficient, and relatively low cost. They've been highly attractive to yield seekers who can generate returns 15 to 30% by participating in the DeFi ecosystem by locking capital in smart contracts. There's a lot going on there, but nonetheless, the fact that they are focusing on building a platform You see the pop there. They're up about $4. That's about 1.5%. Market's positive, but not by that much. You take a look at the daily. This thing's been chopping around since about December. You're going to open basically where you were, 240-ish. You were down to 200, top of the range, maybe 260 or 280. You put it on a 3-year weekly, though, and see where we came from. We were at about $75 coming into COVID, down to 32. We've settled in the area of about 240, and even as I back that up, yeah, you go back to full year daily. Yes, you're back to December prices of $235, but keeping in mind that we just traded, as I said, from $30, let alone this thing was chopping around about $70, but nonetheless higher this morning. Twitter shares, the Curiosity trading a bit higher, not really a reaction to that news, but higher this morning with the market as well. Let's take a look at Facebook. Facebook really pulling back yesterday. So this one's going to be an interesting one to watch. I was trying to take a look at Facebook yesterday. We had a couple Fibonacci numbers on here in terms of where we have retraced to. I'm going to take off the big one. We get the small one up here. Even a 382 brings this thing back to 335, and that's just from the run it had from May 12th. But you traded a 20% run in Facebook over that time, trading from under 300 to 358.79 recently. We were back up near that level. Reading about reports already that the crackdown in terms of Apple talking about privacy, limiting the privacy of some of their users and what Facebook can see. Already hurting, some of the advertisers over there. Facebook really pulled back pretty dramatically yesterday, right out of the gate, from 350 to 340. I mean, folks, that's almost a 3% drop right out of the gate for that company. Be interesting to see if they're able to hold. I mean, they're just at about $1 trillion market capitalization right now. The fundamentals. Come on, there we go. 980 billion with a little bit of a pullback, so back under that number. But man, here's what I'll say about this, is that no matter what has been said about Facebook recently, this thing has been really on a one-way trip since it was trading at 255 on March 8th to 358. You're talking about a 40% run over a period of about 4 months. All right, now you start talking about a natural pullback on this run. You're talking about 320 potentially out there. Could be possible on Facebook. But every time they face some headwinds, folks, this company just prints money. Until, the market really sees that advertising might wane, which is definitely possible, because what's going to end up happening is the ads are not going to be as effective. It's just a natural course of things. People are getting prompted on their iPhones, and it's going to happen on other phones as well. In the Android network, I imagine, if not already so. I'm more familiar with Apple, but they get prompted. Do you want Facebook to track you basically everywhere you go? Most people say, no, I don't want that to happen. And all of a sudden, those ads are not as trackable. They can't see the amount of people converting to sales from Facebook, which was one of the conversions I was reading about yesterday. So a little bit of a pullback, something to keep your eye on here. A normal pullback on Facebook, as I mentioned, could bring it back anywhere down to even 335, which would be a 382 of the first run we had here. Yeah, about 335. If you ever get the 382 of the entire run we had starting in March, you're talking about the 320 area. That's a good 7-8% pullback from where we're trading at. But if the market starts figuring out that they're going to be in trouble and they're not going to print money the way they have, that could be a problem. And privacy is going to be a future concern, ongoing in permanence. And Facebook has really been able to capitalize off quite a time in our lives where we carry around phones that track everything we do. They track every site we go to. They retarget us. They know everything about us. And Facebook allows advertisers to access that information. And think about where they were early on. They've already limited it tremendously, right? I mean, the stuff that came out in the elections in terms of allowing companies to see anything of a friend, as in, I don't have my information public, but because I'm friends with Joe, and Joe has allowed this company to see their information, that company X can now see Joe's friends' information. That's what was going on early on in the harvesting of data that Facebook was allowing. Do you know why they're allowing it, folks? Because it turned it into the most efficient marketing machine the world has ever known, and advertisers rewarded them, rightfully so, to pay them for the services that they were providing. Thankfully, we're clamping down on that a little bit, but interesting action on Facebook. Keep your eye on it, because that could be the beginning of a pullback there. Articles are still going to start coming out, and if we start seeing hard data that those ads aren't working as efficiently as they used to, you could see a curtailing of advertising. Not happening yet, though. Not happening yet, at least. S&Ps drifting up a little bit as we speak. It's not stopping. We get the S&Ps now up about 16 points. We get the NASDAQ 100 up 58. We're going to have the Dow touching right near all-time highs on the open on the Dow, trading at 34,961. The futures, we're looking at a print of 35,000 for an all-time high print dating all the way back to more than 2 months ago, May 10th. What else we have happening? How about some of the airlines opening a little bit higher? We'll get into it after the market opens when we get back, but you get Delta up about 60 cents, 1.5% today. Canada with some plans to open up travel yet again. We get some cruise ships going to be able to operate as well, I believe, for Canada. United Airlines up about 50 cents. The cruise lines, did I just pull up? Carnival up about 40 cents. Norwegian up a bit. Airbnb is an interesting one. Talked about it on my show yesterday. They're well positioned. Their IPO price is 140, which is why it's especially interesting to see if it kind of gets a bid around this level. But internationally, they're going to face some headwinds with COVID not quite over and people not able to book the business they may. Stay tuned, folks. We'll be right back from the market open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Excuse me, folks. Sorry, I had that muted. We'll do it again. S&P's up about 13 points on the open, pulling back a bit. We're trading at 43.63. You get the NASDAQ up about 45 points, 14,832. The Dow just missing the all-time high on the futures, 34,975 was the print we got a few minutes ago. And we got the Russell up about 19 points right now. All right, as I mentioned, some of the airlines trading higher, some of the cruise ships trading higher. We'll see how they're reacting on the open. This is always an interesting one I'm trying to wrap my brain around, folks, because at some point, there's going to be a good buy on these cruise ships and these airlines. When that's going to be is a dicey game as problems persist, especially on an international level. I mean, look at Carnival, right? Remarkable that you could have gotten Carnival. I mean, you're talking about, are we back to, we are back to June, the week of June 1st of 2020. 13 months later, Carnival has no price appreciation. When you think about where we were in June, then you think about where we came into the vaccines. Now, that was November 2nd, okay? We were back down to $13 basically at that point, maybe even $14, give or take. 13, what's our low there? $12.93 I have for the low of that week, okay? So we're up to 22. But in a pre-COVID world, you were trading at 50, let alone trading at 68 going back there. At some point, you're going to navigate somewhere back to higher territory than shopping around here. But we're not there yet, folks, and the market's saying it. We're getting a little bit of a pop today. So there's Carnival. There's Norwegian, up about 0.9%. And what do I got going on here? Let's put this on a daily. So that's a run from the November, okay? Just back to a 50% retracement from the entire run we had from November. When we got the vaccine efficacy, we trade up to $35. Just like that, you give up 30% almost on this thing. You're back to basically, you could call it the bottom of the range, maybe the real bottom of the range. In Norwegian's 22.27. Now, the news out there, along with others, but so Canada plans to seek... Canada's plan, I should say, seeks to allow U.S. travel by mid-August. Now, that's travel of almost any sort in terms of who will be allowed. They're going to allow fully vaccinated travelers from the U.S. as early as mid-August and from other countries by September if the current positive path of vaccination rate and public health conditions continue. The Prime Minister office said Thursday night in a summary of his meetings with provincial leaders. What you also have happening, though, is that you have a move in there with the cruises talking about part of that, saying that Canada said it will allow large cruise ships to resume visiting the country in November. So you got cruise ships, you have airlines, a little bit of a progression with Canada there. But man, we got big hurdles to get over, folks. Even surprising here when you talk about the vaccination rates, okay? Now, the common theme is that I hear it in my own personal life. My friends talk about it, that people are still waiting, okay? And I understand the concern for your own safety. We're talking about 3.54 billion shots, folks. In the U.S., you're talking about 336 million doses. At what point are you waiting for? Which is what I don't understand. I mean, I got an article up here. Do I have it up here? I hope so. Even talking about, I mean, this one is just really confounding, folks. My brain makes my brain hurt in terms of the decisions people are making out there. 4 NFL teams remain under 50% vaccination rates. Very healthy gentlemen, of course, playing in the NFL. But there were reports of a couple people getting COVID last year and really suffering under 50%. I mean, just talking about business-wise, folks. All right, just talking about sports fan-wise. You better hope your team's not one of these teams, because I imagine if this persists into the open, that there's going to be some outbreaks in the current NFL season. Washington, Indianapolis, Arizona, and the Los Angeles Chargers. Good luck to them. The 4 lowest COVID vaccination rates in the league as of Thursday, according to the person. Pittsburgh, Miami, Carolina, and Denver on the higher side there, and are among 10 teams that are at least 85%. I mean, look at the differential of the teams. You got 10 teams that are above 85%. You got 4 teams where not even 1 out of 2 are vaccinated. Overall, 73% of the players. Now, what's interesting here is that the NFL doesn't plan to cancel any games this season. So those teams are just going to suffer if the virus takes hold. You had a Yankees game getting canceled, I think, last night. Was it Yankees-Red Sox? It might have been. There was a Yankees game because of COVID canceled last night. NFL's not going to be canceling games, is their plan. So if that happens, it's going to be on the team. They're going to lose the players. They're going to suffer in the game without those players available. And in a memo sent to clubs last week, so this was obtained by the AP yesterday, the NFL and the NFLPA updated protocols to allow teams traveling to joint practices to have their daily maximum Tier 1 and Tier 2 individuals. Now, Tier 1 is players and coaches. Tier 2 is, I believe, like an assistant coach or an executive or something to that degree. Tier 1's players and coaches. Tier 2's assistant coaches and that like. The traveling party is going to be 100 or 140, depending on the club's vaccination percentage. Now, I couldn't find quick enough when I was reading this earlier this morning which side of the spectrum falls on which side of the vaccination. Are you allowed to be less people because you have a lower vaccination rate, which I think might be the case, or are you allowed to have more people to cover the fact that you might lose some people because you're not vaccinated as a team? I think you're going to have less people. The club must limit the number of individuals traveling on the team to 85, but may travel additional Tier 1 and Tier 2. Beginning of camp. Let's see, there's a couple others. Yeah, I mean, it's really remarkable when you look at what players have to go through. All right, you got less than 50% on 4 teams, and if you're unvaccinated, you got to get daily testing, you got to wear a mask, you got a physical distance. They're not going to allow to eat meals with the teammates, can't participate in media or marketing activities while traveling, they can't use the sauna or the steam room, and may not leave the team hotel or interact with people outside of the team while traveling. Vaccinated players, none of those restrictions. I mean, we'll see what happens. Hopefully those numbers increase because that's quite a set of restrictions. Whoops, what did I just do? But I can understand why, folks. If you're the owner of this team, this is a private business, essentially. Not essentially. And they're going to be in big trouble because they ain't canceling games. And if there's an outbreak, those players aren't going to be allowed to play. And I imagine if this number persists, unfortunately, it's going to be a factor in terms of games this season, which would be a bummer, but we'll see what happens. All right, let's check back in on the market with the S&Ps up about 10 points. Pretty strong action so far on the open. A little bit of a pullback, but we're sitting right near all-time highs, 43.62. NASDAQ 100 holding on to the gains at 14,853. The Dow pulling back a bit. Still above 34,900, 34,909. The Russell up by 14 points. Bitcoin, a little bit of a tough week going on for Bitcoin. We were under 31,000 just as of 8 a.m. Trading 31,815 right now, and we'll jump to crude at about 71.68 and notes and bonds to finish up the roundup. Pretty much where we opened. We got a 10-year. Right now, we're talking about a 10-year yield, of, as we jump it around, 1.325% on that 10-year. And let's check out the VIX as we come in. Lower prices on the VIX as this market just continues with strength. We got a VIX right now, 16. All right, folks, let's see what else we got going on as we come into this break in terms of what we'll be coming back with. One of the stories, interesting when you look at, how do you pronounce that? Xiaomi overtakes Apple as the world's number 2 phone maker, selling phones at 30 to 70% discount. Not surprising to Apple, but nonetheless, Apple, the number 3 phone maker in the world. We'll talk a little bit about that when we come back. Stay tuned, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Shame on me, muted again. Welcome back, folks. We got the S&P up by 7 points. A little bit of a pullback. Tech stocks trading higher on the open. We're up 58 points right now, trading at 14,846. The Dow giving it up a bit. Now up by just 30 points. Russell giving it up a bit as well, but still up about 15 points. So I was talking about, in terms of Apple ceding the number 2 role, thanks to our man Dan in the den. And let me see if I can get this. Xiaomi. Xiaomi. I think I got it. Xiaomi. Maybe I'm nailing it. Either way, they overtake Apple as the number 2 phone maker. Some harsh numbers in here in terms of what it's just dramatic in terms of the number they have. How about biggest smartphone maker over the past quarter following an 83% jump in shipments? The numbers in here, first occasion that Xiaomi, the Chinese maker of everything from rice cookers to gaming monitors, has broken in the top 2. Normally, that's been Samsung and Apple. Samsung had a 19% share, Samsung being number 1, of course. Samsung had, I guess maybe not of course, but yeah, they are the dominator. 19% share in the second quarter. Xiaomi, 17%. Apple at 14%, missing by 3 and missing by 5. Shares of Xiaomi rallied as much as 4.1% Friday. Best performer on the Hang Seng Index. Now, it's interesting here, when you talk about the price tag, we all know Apple is a premium product. So compared with Samsung and Apple, its average selling price 40% cheaper to Samsung and 75% cheaper than Apple. Now, keeping in mind, Apple's selling $1,000 phones on the regular. That's still a $250 phone. I'm ballparking. It's probably even cheaper than that. But you get the point. Apple is just inordinately expensive. You can undercut them by $75. You can pump out a phone on the average that's still a couple $100s over there. A major priority for them, though, this year is going to be to grow the sales of its high-end devices. I guess they have a Mi-11 Ultra, but that'll be a tough battle with Oppo and Vivo sharing the same objective. Yeah, pretty interesting when you look at what they actually control in terms of the numbers that they're making here in terms of, excuse me, let me pull it up. Where are we? The 19, 17, and 14. Yeah, so you're talking about, what, 36, 46, that's exactly 50%. So the 3 of them combined are only 50% of the market. Amazing that you take Samsung, Xiaomi, and Apple out of the equation. That's still 50% of the market selling phones when most people just know those brands in its entirety. Now, they get into here. Huawei had briefly disrupted the rankings until sanctions cut it off from essential chip supplies last year, and its withdrawal from the highly competitive smartphone market pushed other Chinese vendors to spend aggressively on new hardware and upgrades. Xiaomi was particularly active, 2 flagship devices within the first 4 months of the year. Largest camera sensors in the smartphone to date, underscoring the firm's ambition to push in the premium pricing range. But guess what, folks? Apple don't care. We trade higher by about 0.5%. I kid. But pretty remarkable action on Apple all week. You pull up the daily in terms of where we are, and I've mentioned it before, folks. The run that we've had, we're up basically $27 from where you were trading at 6 weeks ago on this on this equity, and you're talking about almost more than a 20% pop, and you're talking about every single $10 this thing is adding is about $170 billion in market cap. So over that period of time, folks, what is it? It's 170, it's 340, and then you're talking about 400 plus billion market cap has been added, and we have Apple. I mean, no one's really been talking about it. You might get Apple at $3 trillion before we know it. We're at $2.5 trillion, give or take, folks, market capitalization on Apple. Remarkable when even some of the other biggest companies out there in the world that we think of, Microsoft, well, they've been gaining some hay as well. $2.135 trillion is Microsoft. Amazon, not quite to that level yet. $1.8 trillion, though. Really remarkable. Some of these companies have really appreciated recently in a big way. Google shares, $1.7 trillion as they all inch forward. But Apple leaps and bounds ahead at about $2.5 trillion. Checking back on the S&Ps right now, we're sitting at about 7 points higher on this index. And as I mentioned, we're right in the middle of this trading range in terms of the upward channel line. You know, we don't have to pull back to the, whoops, I'm going to extend that to the right to see the run. We don't have to pull back to the lower or the upper boundary line, folks. But it's a pretty well-defined channel line that we are in. Anytime we've even come near the bottom line, even that drop we had Friday, the June 18th, I remember talking about that we had climbed below that level. Be interesting to see if you could get back above it. Well, since Monday, June 21st, you have the S&P. We open at 41.42. We're up about 220 points right now from that price level. That's about a 5% acceleration the moment we had touched the bottom of that trend line. Okay, jumping around to other stocks that have been making moves this morning. Yeah, so Intel looks like they're exploring a deal to buy the fellow semiconductor maker Global Foundries. I'm not familiar with Global Foundries, but maybe I should be because they're valued at about $30 billion. Quite a price tag. You jump over to Intel shares this morning, and we're up about 1.7% on that number. We'll put it on a 15-minute. Really, the thing accelerates right out of the gate to above where we were pre-market on that news. We talked about the cruise ships, the travel. Yeah, the meme stocks may be worth mentioning. Quite a little turnaround we had going on yesterday. AMC trades from 31, finishes the session at, 36? Yeah, and we popped to, we finished about 36 yesterday, made it 40 overnight. I mean, that could be a break in the downward channel that you got there, but boy, I would not be messing around with this, folks, in any way, because that is a parabolic formation, and the bottom of that parabola is at about $12. Whether we get there or not, anybody's guess, but no reason why this thing stops, middle of the run that we had on the upward side when we pulled back from 60 to 30. No reason why it can't go to 12. We are in this little gap here, which is interesting, where that's the huge run that it had up to 72. We pull up GameStop. Pretty similar territory. We're back to 170. This thing's been all over the place, but maybe you find a bid at about 150 on GameStop shares. And what's happening with this market, folks? We're melting a little bit. We're melting. We're only up by 4 points right now at 43.56 right now in the S&Bs. And it's going to be interesting because we get earnings season kicking off in a big way. We get Microsoft kicking things off next week, I believe, among many others. Jump over to the Analyze tab. You pull up the earnings sub tab under that. Yeah, July 21st. So Microsoft next Wednesday, they're out with their numbers. And then I believe we get, I'm pulling it up as we speak. Give me 2 seconds because I'm going to pull up in terms of the numbers I have up here, in terms of the earnings and what we're looking at. Oh, come on. Where are we? All right, I'll pull it up at the break that we have coming up, but I'm going to go through them in terms of, I believe we get Apple is the following week. Yeah, the 27th. Google shares the 27th as well. And then Amazon shares the 29th. I believe we got Facebook the 28th. There we go. Facebook the 28th. So we'll surmise when we get back. Point being, we got tech stocks coming out. Microsoft next week. All right, then you get Amazon, Facebook, Google, the following week, expectations at all-time highs. The question I find asking myself continually is, what is the risk reward of this market accelerating higher for those tech stocks? I mean, is Apple and Microsoft, are they going to push higher, or was this the push higher ahead of their earnings? Okay, we're going to finish up the program when we get back and think about it, because I am thinking this might have been getting ahead of that earnings season, folks. You just traded, as I mentioned, from 123 to 150. You just traded up $27. Apple just added $400 billion in market cap over the last 6 weeks. Maybe that was the run ahead of earnings. Maybe we pull back a little bit. Maybe we just trade consolidate. We'll be right back to talk about it.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&P's positive by 4 points. We take a look at the chart. I got it up here on a 5-minute basis. Not what you'd want to see if you're a bull on the open. We open, that is the 925 bar. We come into the open at about 43.65. Since then, we're down about 10 points on a 5-minute bar basis, though. You can see red bars across the board since we've opened in the market. Jumping back, as I mentioned, to some of the earnings we got coming up. So, you know, it's a theoretical thought, not really a technical analysis thought. They all combine, though. You know, as I mentioned, folks, you just traded from 123 to 150 on Apple. That's $27. There's 16.7 billion shares outstanding. You're talking about, and do the numbers, but that's 400 billion plus market capitalization you just added coming into their earnings. Now we get Microsoft and Tesla, Okay, now this is among many others, but these are just the headline numbers. Next Wednesday, Microsoft and Tesla, July 21st. The following week is the big one. We get Apple and Google. I'll walk through Apple and Google on Tuesday the 27th, Facebook on the 28th, Amazon on the 29th. So Microsoft next Wednesday, Tesla next Wednesday. On the 27th, July 27th, that is, we get Apple and Google. We get Amazon. We get Facebook. Now, folks, you pull up the heat map of even the S&P 500, okay? That's talking about all the biggest companies. Microsoft, Apple, Google, Facebook, Amazon, right? I mean, that's basically all of them that are in there in terms of the big companies that are standing out in a big way. You see the market capitalizations that they have. You see how big they are, and they're all coming out in the next 2 weeks. Point being, we have just run through the roof, folks. NASDAQ 100 just ran from 13,000 to 15,000 in the 6 weeks leading up to that number. Tough to see maybe that we accelerate into those earnings. Again, expectations at all-time highs because the market is at all-time highs, and we'll see what happens. Nonetheless, S&P is sitting up here about 4 points in the positive. Folks, I'm not a bear in any way, but natural pullbacks have to pull back in this market that we've just risen from November of 3,200 to 4,400 almost on the S&Ps, and on a 6-week basis, you're talking about trading up almost 10% coming into that number. You got Apple up 25%. Thanks so much for tuning in, folks. Stay tuned. We got our man Basil Chapman coming up next. Live programming all market day at TFNN. Should be an interesting Friday in the market. Stay tuned for Basil, folks.